Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thanks very much for joining us. Coming up on the show today, Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth, is our guest co-host. And in about 30 minutes, Stats Canada will release the December labor numbers. And to help break it all down will be Jimmy Jean, Vice President, Strategist, and Chief Economist at Desjardins. He will be joining us. And of course, we want to hear from you. It's on First Call. You can get your questions in on stocks. We'll have Alan answer as many of them as he can. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Our email address, firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Aritzia posted higher profit in its latest quarter, as well as revenue that topped Bay Street expectations. Revenue jumped 43% compared to the year before to a little more than $1 billion. Same-store sales also saw an increase across all categories. The clothing retailer says the results were driven by higher U.S. sales, digital initiatives, and marketing. Shares of Tilray are seeing a surge in pre-market. Net revenue and profit in its most recent quarter beat estimates, with distribution sales 26% higher than last year. Tilray's cannabis unit also saw an increase boosted by higher sales in its Canadian and international segments. It expects to see growth in its medical cannabis unit following U.S. President Trump's move to reclassify marijuana there. Shares of WD-40 are trading lower in the pre-market. That's after the lubricant spray maker posted disappointing profits in its first quarter. Analysts are also noting a 1% increase in sales compared to the same period last year. WD-40 says the quarter was impacted by lower sales across the Asia-Pacific region due to timing factors in distribution. And now our top-line story. The U.S. Supreme Court has its first chance to rule on the implications and legality of Trump's global duties on trade partners. For more on how Canada could be affected, CTV's Abigail Beeman filed this report.
Are they legal or are they not?
That's the big question that could be answered by the U.S. Supreme Court Friday about the American president's decision to impose so-called IEEPA tariffs on countries including Canada. This trade expert says if the court strikes them down, attention will be on what happens to the money collected, valued as high as $150 billion US dollars.
If it's supposed to then go back to those who it has been collected from illegally, then our clients and businesses in general will be looking to see some of that money refunded.
There's not a lot of optimism about a likely messy refund situation. Meanwhile, new numbers from October show Canada recorded a smaller than expected trade deficit overall.
The big takeaway is that things are kind of not moving all that much with the U.S. in terms of overall trade. They're kind of in a holding pattern. What we saw in contrast is that exports were through the roof for non-U.S. countries that we're sending goods to.
Donald Trump is still extolling the virtues of tariffs, posting Tuesday, "Thank you, Mr. Tariff. Pray that the United States Supreme Court allows our country to continue its unprecedented march toward unparalleled greatness."
I think that the U.S. administration is going to continue to impose tariffs, irrespective of the outcome.
But the Supreme Court could send a wider message about the American president's power.
It will be very important to see how the Supreme Court rules, to see whether they're striking down a lot of those broad presidential powers that they might use to, use the next piece of legislation to support tariffs.
The Canadian government isn't saying much about the expected ruling. A source tells CTV News they are letting the judicial process follow its course and will continue to get ready for the upcoming free trade review.
That was CTV's Abigail Beeman. Let's bring in our guest co-host, Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. Alan, thanks as always for joining us. Happy New Year.
Happy New Year. Good morning.
It's the last official day that we can say that before we have to just get back into a normal run here. What do you think we're going to see today? There's not even official confirmation that the Supreme Court is actually going to announce the decision today, but it kind of feels and sounds like it probably should.
Yeah, it'll disappoint a lot of people if it doesn't. I think as everybody is saying, I haven't heard anyone say something different in that if they do strike down or say that the president was not or should not have been able to put through these tariffs, it's the talk that somehow, some way, the administration will find other ways to continue to have these tariffs in place. So I just don't know how much of an effect it's going to have. It might have a knee-jerk reaction, kind of a shoot first, ask questions later kind of reaction for the markets. You could see, areas of the market move on some sort of announcement, whether it's a retail company like Nike and a toy company like Mattel, a home furnishing company like Restoration Hardware, or anybody else out there. What are the effects going to be on countries? Canada, China. So I just think that you could see a reaction. It'll be probably short-lived. And my advice to everybody would be that initial reaction may not be the right one or the one that prevails over the long term.
Just kind of sit and breathe for a second, because there's a lot to untangle. If they do rule that they were illegal, the tariffs, and companies are entitled to their money back, what a web to untangle.
A big one, yeah. And where are they going to get the money from? And there's going to be obviously some challenges. Maybe this carries on. The administration has said they have ideas as to how they can get around any negative ruling from the Supreme Court. And everyone that I've spoken to, they're saying that tariffs aren't going to go away, even if they're struck down by the Supreme Court. They will find a way to get around the ruling. So with that in mind, how much of a game changer is today, possibly today, we don't know yet, but possibly today going to be? And of course, if the Supreme Court upholds the tariffs and says the president has the right to do it, what kind of precedent does that set for not only the current president, but future presidents to come? Can they use rulings or things that have gone on 50 years ago, bring them forward, revamp them, and use them for today? Is not allowing clothing or tariffing clothing coming from Asia, is that part of an emergency situation that you should put tariffs on there, that type of good? Obviously not. The president's obviously stretching what they can do with this tariff. So it'll be difficult to see how they can actually agree with it.
And they could bring some tariffs back in under the Trade Act of 74. I'm just reading some of this. 15% rate for as long as 150 days. And they could also bring in other rates under Section 338. So for the U.S. So there is options. And I guess how much of a factor is how Trump reacts to whatever we see today? How much will that play with the market?
I think a big one, right? And he's emotional, right? There's no doubt that if the Supreme Court rules against his administration, I have to believe that we will see that play out. He will probably have some sort of commentary, either social media. Don't know if he'll hold a press conference, but definitely he'll be tweeting out some comments with respect to the ruling. My guess also is that he'll probably say something along the lines of, don't worry, we got this covered. We were expecting this may, or at least thinking that this may happen. And so this is what we're going to do next. Stay tuned kind of thing. So I think either way, the markets may react, but I think that will be a short-term phenomenon.
Okay. And one of the things that might come back to with this is the de minimis exemption could be brought back, which for a lot of small Canadian companies would be a nice break for them.
Nice break for anybody. Yeah, absolutely. Small Canadian companies, China bringing a lot of cheap goods into the United States. Maybe that would return as well. I think in the long run, what will it mean for Americans? It means that they're going to get goods cheaper in general. Is that a bad thing? I would think not. But obviously the tariffs are what they are. And if they're able to stay in place, then Americans continue to pay these higher prices.
All right. First week of January, almost done. We're going to chat some more, Alan, when we come back. But let's take a look at the markets before the bell first. All right, let's see how things are shaping up on the markets. We will start with the U.S. futures. And, of course, traders awaiting the December jobs report south of the border and up here as well. But the possible Supreme Court ruling on Trump's tariffs as well. Everybody's sitting and looking at that. You can see it's kind of flat for the most, or it's up slightly, but the wash for the Dow. NASDAQ up by 0.2 and the S&P 500 up by 0.13. Heading over to Asia. Let's see how they did today. And the Nikkei up by 1.61%, the Hang Seng 0.32, and the CSI 300.45 heading into the weekend. Moving over to Europe, talk of a possible deal between Glencore and Rio Tinto driving Glencore up, and markets are up overall. You can see the FTSE well over 10,000 now, up by 0.58%, and the CAC Coral up 0.95%, nearly a full point. German DAX up by 0.42, all of them pushing into near record territory. And the TSX bouncing back yesterday. It closed up by almost more than 3/4 of a point, and again hovering near record highs. The advance was broad-based, led by energy. And some of the winners and losers from yesterday. Cargojet recovering there for the day, up almost 7.5%. 5N Plus up by more than 7%. NGX Minerals down 4.79%, and Celestica off by 5.62%. And taking a look at the metals, they were down earlier, but have bounced back a little bit, and silver still on that roller coaster. Gold is up now 0.38%. Silver up 3.5 almost percent, and copper also up by more than 2%. All of them again sitting at near record numbers. And looking at oil, the discount widening as traders weigh in on the impact of Venezuela. And WCS up, though, yesterday more than nearly 3% at 42.66. And south of the border, WTI, what is it doing right now? It is up 0.78% at 58.21. We've got the unrest in Iran, uncertainty in Venezuela weighing today. Okay, last night after the bell, Aritzia reported net revenue for the third quarter that beat the average analyst estimate. For more on the Canadian retailer, let's take a quick look at the numbers with Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. My throat, I'm going to have a drink of water. Alan, when you start talking, well, I have a drink of water.
No problem. Yeah, no, Aritzia numbers were fantastic, right?
Excuse me.
Blew away all
expectations. All expectations.
A lot of reasons for that. Same-store sales higher increase down south in the United States. That was nice to see. They obviously have a new app, e-commerce, retail sales at their stores. Everything just firing, as the CEO, Jennifer Wong, says, firing on all cylinders. So for a guy like me, when you see these kinds of numbers, you see the results and the stock, the shares, how much they've appreciated. Looking at PE multiples and looking at where the stock is trading, definitely not cheap, but obviously not cheap for a reason. It deserves to have higher multiples. But the question I think investors want to know is this as good as it gets? Can the stock continue to move higher? What's it going to take? How can it get to the next level? If everything is firing on all cylinders, as Jennifer Wong, CEO, says, can it fire on even more cylinders? Yeah. Is that possible? I just not sure.
And what is the next level for a retailer like Aritzia? Where does it go?
Great question. And that's my concern. I don't know what that next level is. Can it continue to fire at these levels? And if so, at some point, will investors just say, okay, let's take a little profit off the table? And like all other retailers before Aritzia, whether it's as simple as a Walmart or other companies, you become a victim of your own success in that you grow earnings, you grow revenues, you grow margins up a certain percent. And then what happens if you don't grow it as much the quarter?
I mean, a good example for that, Adidas, right? Just saw a double down, or a double. But it was double downgrade this week.
Yeah, and it's because not the company is doing poorly or the company is struggling. It's because how long can you continue to maintain that level, that pace of growth? And you can, extrapolate that to other sectors as well. We talk about NVIDIA all the time. How long can NVIDIA grow 62% revenues, margins 75%? So big companies, as they become bigger, as they become expand into other areas, as I said with Aritzia, with their new app, e-commerce, can they continue to maintain that growth level and increase it? If they don't, you will see a bit of a profit taking. It doesn't mean that the company is not doing well, but for investors out there, you always want to skate to where the puck's going, not where the puck has been. Yep. The question is, can Aritzia maintain this level of growth? And that is a good question. All
right, now a hard left, and we're going to go talk about oil. We've got a kind of added one with Iran right now, the political unrest that's happening there. I mean, Iran, it's not the largest producer, but it is a producer, and then Venezuela. Where do you see everything going and shaking out over the next little while?
Yeah, so for me, oil has been hands-off for a little while now, not even well before all the Venezuela stuff, Iran, Middle East. To me, when President Trump came into office, he knew that his tariffs would cause a rise in prices. He may not have said it, but they will. And so what his plan, in my opinion, has always been is to offset the rising inflation, to bring down the cost of energy or oil. That was his offset. And I think he would love to see the price of oil at $50 a barrel WTI or lower. And I think he talked to the Saudis to raise quotas from OPEC. That has happened over the last year or so. Now with Venezuela and the U.S. being there, if they can, over the medium to longer term, increase production out of Venezuela, and we don't talk about it much lately, but if the Russia-Ukraine situation, if they can come into an agreement there, what does that mean for Russian oil that comes onto the market? Could that be an increase there? Iran, yes, there's some unrest there, so that's a bit of a wild card. But I think all arrows point to more oil being produced over the long term. Yes, in the short term, it's going to be a bumpy ride, volatility. You're going to see spikes in oil up and down. But over the long term, I think there's a lot of oil out there in the world, a lot of production coming online. U.S. is producing 13, 14 million barrels a day. I think the president's wish is to get oil down to 50 or lower. Yeah. And I think he actually will do that.
What would that mean for Canadian oil, do you think?
Great question. I think like U.S. oil, like oil companies in general, I think they're going to be in tough. The kicker is if Chevron can get into or expand in Venezuela, or other oil companies can go down to Venezuela and expand. So they're selling oil at a cheaper price, but they're producing more of it. So maybe there's a bit of an offset. With respect to oil companies here in our country worried about the Venezuela situation, well, we know the Prime Minister is going to China. Perhaps there's a deal coming that China will start to purchase Canadian oil or increase that purchase to offset the oil that they may not be getting now from Venezuela. So will that be a good thing for Canadians, for Canada? Some people say yes, and some people say no. And a lot of people don't like to be dealing with China. I know it'd be interesting to see what Premier Ford has to say. I know he has made comments in the past about, the Can-Am Fortress, Canada-US, and let's leave China out. And now here we are going to China.
Maybe having to deal with China.
There you go.
It'll be interesting to see politically, too, as well. Okay, we could talk a lot more about that, but we have to take a break. We'll be back with Alan to see why tech stocks are still on his radar. All right, time now for seeing what's on the radar for Alan Small. He's a senior investment advisor at Alan Small Financial Group, IA Private Wealth. And Alan, 2025 was about tech stocks. 2026 is about more tech stocks. What do you like? Companies maybe that people don't think of as tech stocks.
As tech stocks, yeah. And so definitely a broadening out from the Mag 7, as we were saying before we came on here. The Mag 7 names have basically driven the bus for tech, for the markets for so long. And last year, if you look at the biggest winners, none of them were Mag 7. I think the best Mag 7 name was Alphabet, up about 66%, nothing to sneeze at. But you look at some of the data storage names, they were up, hundreds of percent, whether it was a Western Digital, Seagate, SanDisk. Then you look at some names like Micron, a chip maker, memory chips, up well over 100% as well. So it seems to be a broadening out from the Mag 7, adding other names not even that you would consider as tech. What about all the power generation names?
Well, yeah, Meta now just announcing the nuclear power deals that they're trying to build, right? And that's one of the ones that's bringing these people in and raising awareness of them.
That's right. The nuclear power companies, the Vistras of the world, GE Vernova is another name that comes to mind. All these companies that are now making deals with these big cap tech names because the tech companies realize to power these data centers, you need a lot of energy, a lot of power. The grid, we just can't, the United States and I guess really around the world, just not enough power out there to run the massive amounts of data centers that are being built out, that have already been built and that they continue to build. And so, when you think about tech now, you have to look about all those other companies that go along with tech that you would not maybe think as tech. Now those stocks are going up in tandem with the technology space.
So how do you approach that when you're looking for companies? Because now you've broadened it out and there's a lot more to look at. What are you basing the decisions on?
I always go back to basics, right? You look at the bottom-up stock picking. You look at what companies will benefit from what's going on right now. So you look at the story behind the name, and then you look at where these names are trading. Some of them are trading a lot more expensive than others. So as we just said, GE Vernova, a lot more expensive than a Vistra. You look at other tech names. You can look back or circle back to some of the Mag 7 names like a Meta. Meta now is trading extremely cheap versus the other Mag 7 names. Microsoft didn't really do an awful lot last year. Amazon has had a great start to 26, but that also lagged last year. I think it was only up like single digits. So there are a lot of names, Mag 7, non-Mag 7, that have really did not perform well. We didn't see their share prices move higher. I think those are the names you can circle back to. Some of those names in the data storage and in memory, tough to buy those names at these lofty prices, but for whatever reason, they continue to rise. People still continue to jump on the bandwagon, but make no mistake, if we start to hear that, for example, memory chips, there's a bit of a glut in that space, watch how fast those names like Micron will sell off. So got to be careful, not for the faint of heart, but you definitely want to continue to look at tech, because I still believe tech is going to power really everything. And I'll just say with the CES this week, right, Consumer Electronics Show out of the US, out of Las Vegas, a lot of great announcements, NVIDIA new chips, AMD new chips, robo-taxis, robotics, all that is coming, and that is exciting.
But we also heard from NVIDIA at the CES that they might not need coolers for some of their chips, which changes one of the suppliers, and we watched their stock. I was trying to remember which one it was, but their stock
Vertiv
dropped.
Yes.
Yeah, it dropped, right?
Yeah. So the Vertiv is basically they supply everything to do with the rack, where where everything sits, whether it's cooling systems, whether they control the energy, they regulate the energy coming in and out, the rack itself. Vertiv is a name that has definitely benefited. There it is, right there, up today. It looks like benefited from data center build, and I think they will continue. Interesting, Cody, the gentleman who. For the longest time affiliated with Honeywell. Now he's one of the top guys over at Vertiv. I saw an interview with him recently. He spoke really highly of what they're doing over there at Vertiv. So yeah, I guess with the new chips, the Vera Rubin chips out of NVIDIA, maybe you don't need as much in the way of cooling. Maybe it doesn't require as much energy to use, but still going to be a definite shortage there.
What about natural gas companies, things like that are going to supply the power? Absolutely.
Natural gas companies, utilities, it's all nuclear. It's all going to, it's already rising based on what we're talking about now. I anticipate it continue to rise, and that's where you have to do your homework. Which ones are you going to want to own? Yeah. Which ones haven't gone up as much as yet? And obviously, if you can get a nice dividend while you wait for the growth, that's always a good recipe for success.
And one last with nuclear, any concerns? I mean, this is a long-term project if they're going to bring nuclear in as power. Any concerns that that might go bust and they might just stay with natural gas or things like that?
Well, I think that you make a good point, right? The long term of nuclear and other energy sources, it doesn't really match up, right? Because you can build out a data center a lot quicker than you can add some nuclear energy in 3 Mile Island or whatever it is and get that going again. So I think there's a bit of a mismatch. I think that whole nuclear idea and some of the other power companies that names like Meta and others are buying into or buying up, I think that is for the longer term. The question is, where are they going to get their power in the short term? And that's the big question.
All right, we're going to wrap it up there. But still ahead, we're going to have the breaking data for Statistics Canada's latest labor force survey. And, of course, our phone lines will open soon for our first call segment. You can reach us at 1-855-326-6266. Email us as well, firstcall@bellmedia.ca. Aritzia posted higher profit in its latest quarter as well as revenue that topped Bay Street expectations. Revenue jumped 43% compared to the year before, a little more than $1 billion. Same-store sales also saw an increase across all categories. The clothing retailer says the results were driven by higher U.S. sales, digital initiatives, and marketing. Aritzia also raised its full-year revenue outlook. Shares of Tilray brands are seeing a surge in pre-market trading. It's up more than 11% right now. Net revenue and profit in its most recent quarter beat estimates, with distribution sales 26% higher than last year. Tilray's cannabis unit also saw an increase boosted by higher sales in its Canadian and international segments. It expects to see growth in its medical cannabis unit following U.S. President Trump's move to reclassify cannabis. Glencore has confirmed it is in talks with Rio Tinto on a potential merger. The news comes a little over a year after earlier talks between the two collapsed. The mining giant says both companies have been discussing a potential combination of some or all of their businesses, including an all-share takeover. Bloomberg is also reporting that Rio is open to retaining Glencore's coal business if the talks are successful. Glencore says Rio must announce intention to make an offer by February 5th. And looking at the markets right now, you can see them starting to move. We haven't seen the U.S. unemployment numbers yet, but this might be a factor in this. Dow's up by 0.18. NASDAQ is up by 0.28, 0.25. And the S&P 500 up by 0.2%. Statistics Canada has just released the most recent labor force survey. In December, employment was little changed and the employment rate held steady at 60.9%. The unemployment rate rose 0.3 percentage points to 6.8% as more people searched for work. Here to unpack those numbers is Jimmy Jean, Vice President, Strategist, and Chief Economist at the Desjardins Group. Jimmy, thanks as always for joining us, and Happy New Year to you.
Happy New Year. Thanks for having me.
This number seems a little bit more in line after what we saw with November's numbers.
Yeah, well, I mean, it's coming in more subdued, definitely, but still above expectations here. Consensus expectations were for a very slight decline. So, and we managed to get a fourth consecutive month of gain. So that is positive, I would say. Of course, the flip side is that we see a pretty significant rise in the unemployment rate, but that comes after a pretty steep decline in the month of November. And the reason the unemployment rate goes up is because you have more people searching for jobs, so the participation rate goes up, and you also have an increase in the labor force. So it's not the sort of rise in the unemployment rate that is due to mass layoffs. That we're not seeing that in the numbers. It's more people that are looking for jobs. So I would say it's a satisfactory report overall, with the headline numbers. And it does suggest that through all the trade concerns and the uncertainty, the job market manages to stay quite resilient.
So do you think, I guess, because the jobs situation has managed to stay resilient and I guess surprised many people, right? Because we thought with regards to the tariffs that things would look a lot worse, and that worst case scenario never materialized. You think that's why the Bank of Canada was on hold this past, I guess, December? They cut rates in the U.S. Their jobs numbers obviously are also waning a little bit, but their growth numbers are better than ours. Their inflation is higher than ours, yet they still cut rates. What do you think these numbers mean for the Bank of Canada? I guess that's what it all comes down to. Do you think they're going to cut rates based on these numbers?
Yeah, and I think the Bank of Canada had a little bit of a lead compared to the Fed in 2025. So they had cut rates in advance. The Fed decided to resume its rate cut cycle later than the Bank of Canada. So interest rates in the U.S. are higher than they are in Canada. So from that standpoint, the Bank of Canada indeed felt it had the, I guess, luxury of time. You still had inflation above the target, slightly above the target. Of course, lots of distortion in the inflation numbers, and we're going to see that in the upcoming months. So I think the Bank of Canada just wants to wait to have clearer numbers on that front. But yeah, the job market resilience is certainly part of it. And I think today's numbers just reinforce the idea that there's no sense of panic here. So long as trade is not extremely damaging. We saw numbers yesterday that showed exports actually going up. We're seeing diversification as well. The exports to countries other than the U.S. are ramping up. Still a smaller share, of course, of total exports, but are ramping up very rapidly. And we know that the fiscal picture is very stimulative, is going to be very stimulative in 2026, particularly starting the second half of the year. So the Bank of Canada takes all this information in consideration, and we think it's still on hold. We think it's on hold for the remainder of the year, unless something very disruptive were to happen. Of course, we're going to be looking at the CUSMA revision talks very attentively. I think that is the major wild card right now. We abstract from all the geopolitical stuff going on right now, but otherwise, it's really the CUSMA revision process. But otherwise, with the information at hand, I don't think there's a compelling case to do anything at the next meeting.
Just want to bring it back to some of the numbers. The youth unemployment rate, we're just putting this one in here, 15 to 24, it rose 0.5% out to 13.3. We saw a decent drop in November. Any idea on why the swings?
Yeah, and we see in November we had seen a pretty big increase in part-time job creation, which tends to disproportionately be filled by youth, and now we see a little bit of a reversal there. This is what we said last time. We have to be careful in not overinterpreting the full-time, part-time distribution of job creation because it's very volatile, and that's what I think the drop in youth employment in the month of December reflects that. So I think we have to wait a few months to determine where the trend is. But certainly, I think the big picture, and even it was the case in November, despite that drop in the unemployment rate, it's still very tough out there for the new entrants to the labor market.
I guess for me, I know we talk about the numbers and everything, and I asked the question about Bank of Canada because I think that's what it all comes down to, right? Making things more affordable for Canadians, hopefully more jobs created, more money in the hands of Canadians. I know Premier Ford talked at a presser recently talking about cutting taxes, cutting interest rates. Now we're seeing jobs growth hanging in there. I guess, with our economy predicted to grow just over 1%, to me, I'm hopeful that the Bank of Canada would actually consider cutting rates at some point, even with some job creation, making things maybe a little bit better. I know that we're just we can afford to take a wait and see approach, but what happens if we actually were more proactive and we actually tried to do things to stimulate growth, to grow more jobs, to put more money in the hands of individuals? Do you think that would make sense, or do you think that would be inflationary, or would that be an issue?
I think that's the big issue, and the inflation crisis of 2022-2023 is still very vivid in the minds of Bank of Canada officials, and they want to avoid being perceived as careless managers of that risk. So I think they manage that risk very attentively. It's true that at face value, Canada could benefit from support, but I think the approach has to come really from the government. Interest rates, they work to a certain extent, but we know that they have adverse consequences in terms of fueling real estate exuberance. We've seen that movie before, and certainly that's not the approach we're thinking right now is the right approach long term to support this economy. We need to see more investment. We need to see trade diversification. And really, the Bank of Canada interest rates only play a secondary role in boosting that. Okay. Having said that, you look at rates currently, they're not restrictive either. They're even very close to being stimulative. And the Bank of Canada has its door open. I mean, if the numbers of the economic numbers or if inflation were to undershoot, they've been clear they'd be ready to give a little bit more. So I'm not too worried about that, but certainly I think the focus still needs to remain on government, and not just what they announced in the last budget, but also deregulation, boosting productivity, and that's there's been little on that, and we need to see that happen as well.
Okay, we have to wrap it up there, but Jimmy, thanks as always for your input. Always appreciated.
Thank you.
Jimmy Jean is Vice President, Strategist, and Chief Economist at the Desjardins Group. Still ahead, we'll hear from Canada's former ambassador to the United Nations about Trump's renewed threats to Greenland and NATO. That's after the break. Well, there are questions and concerns again about the future of Greenland after the White House again suggested the U.S. could maybe buy the Arctic island or invade it. We sat down with Bob Rae, Canada's former ambassador to the United Nations, to discuss the possibility of a U.S. invasion of Greenland.
They've been very explicit about the plan, which is to essentially take over Greenland. The president has said it many times. Stephen Miller has said it. Vice President has been involved. A lot of people in the administration are talking about it. So I don't think we can say it's an exaggeration. I think it's clearly an important part of the American plan to control as much of the Western Hemisphere as they possibly can.
Okay, so you do see it as a plan as opposed to just a musing of the president?
Totally.
Okay.
Yeah, absolutely.
Is this about Arctic sovereignty, as we hear Donald Trump talk about security needed in the Arctic? Is this about critical minerals or Trump's disregard for NATO or something else?
I think it's all of the above. I don't think, based on what we've seen and what they've done in Venezuela, the way in which they've structured whatever agreements have been made for Gaza, and what they've been discussing with Ukraine, what they've also discussed with Rwanda and the Congo with respect to that treaty. Everything they do has what I would call an economic, with a polite way to say would be an economic component. Another word would be to say it's a grift component, because it really has to do directly with the interests of the United States, but also with the interests of investors and people who are close to the president. So this is the new Trump formula. Something for me, something for you, something for others, but there's always something for me. That's the way it seems to work, which is what makes it, frankly, so absolutely appalling. When King Leopold's Ghost, a great book written many years ago, described how the Belgian king in the 19th century basically looted the Congo, completely looted it, as well as killing millions of people. But we're seeing a pattern, which is gunboat diplomacy, people going up the river, creating a crisis, and then stealing the resources. And that seems to be the common thread through the whole piece.
Do you see this then as a clear abuse of American power and authority?
Absolutely. I think the American people see it many American people see it that way. They should see it that way. There's nothing wholesome about this whole enterprise. It is not about, quote, security. If there was a security concern, it could be dealt with through NATO. NATO could deal with that. There's no need to punish the entire population of Greenland to create security. There's no need to take over a country. There's no need to run a country, to run an oil industry. Those things have nothing to do with security. They have everything to do with taking advantage of a situation and using power to exclude the people of a country and to take advantage of their vulnerability and to use that wealth for their own advantage. I mean, this is not a pretty picture by any stretch of the imagination.
You have said in the past that Trump only understands power. So how does Europe, Canada, or anyone else get him to respect world order?
I think there's two elements to this. The first is what the rest of the world can do together, and the way in which we can begin to work more effectively together to counter the arguments that the president is making, and to show the people of Greenland and show everyone what the alternatives are. The second has to do with Congress and with all the elements of American democracy. A government that is unhinged from international law is usually, I would say 99.9% of the time, unhinged from domestic law as well. And certainly there are voices in Congress who are expressing this point of view. And I think this is the nature of the debate that will happen inside the United States. And public opinion in the United States is not particularly thrilled with these ventures and these adventures and these advantages that President Trump and his associates are taking to their own personal benefit. And I think that's where this becomes a major issue for the American public.
Okay, what would the fallout of a U.S. incursion into Greenland look like? What would be the fallout as far as a reaction from Canada or other NATO allies?
Well, I think we're already seeing it. I mean, I don't think we know exactly how this is exactly going to unfold, except we do know that something is going to unfold, either a conscious decision not to proceed or a decision to say, here's the plan. And they're certainly not going to tell us about it or confide in their allies as to how it is they intend to do this. But whichever it is, it's going to be extremely problematic. It's going to be extremely damaging to the NATO alliance in every sense, and it will dramatically undermine the credibility of the United States from an international perspective. The reputation of the country is at stake, and as all of us know in our lives, our reputations are all we have, and this will create enormous reputational damage to the United States.
Has the world and world leaders or UN advocates been too diplomatic about this? And I ask because that is typically, historically, how conflicts get worked out at a high level. There is diplomacy. But do you feel like leaders in the world have been a little too diplomatic here and should have already taken some action?
Well, I don't think diplomacy should be synonymous with weakness. We need to be clear about what is wrong with this idea. It's an affront to sovereignty. It's an affront to territorial integrity. It's an affront to the Charter of the United Nations. It's with respect to the economic aspects of it, it is so obvious that it is an abuse of power. And I don't know why people are afraid to use these words. I don't know why all of us wouldn't be saying the same thing at the same time. I think the language that's being used that came out of Paris this last week has been better and stronger. But I think our position should be absolutely clear. And I think the sense of outrage that is shared by, according to all the polls, the majority of the American public, as well as the vast majority of world opinion, I think should be made very, very clear. Because I think the damage to the United States, and frankly, the damage to the security of the United States, the security of the United States depends, as all our security depends, on the confidence and the goodwill of the vast majority of people in the world. And they're losing that hand over fist with this kind of behavior.
Well, I was speaking with Bob Ray, Canada's former ambassador to the United Nations. Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, focusing on Airbnb. All right, let's take a look at one of the notable analyst calls and recommendations moving the markets today. Airbnb shares are up in pre-market trading after Barclays upgraded the company to equal weight from underweight. Analyst Trevor Young says they see upside to room nights from Reserve, now Pay Later, hotels, and World Cup, with stable and improving margins in 2026. He notes that the stock's valuation is still a bit rich, while execution in hotels and other new adjacencies remains a bit of a show-me story. Barclays price target is set to 120 US, up from 107. The upgrade reflects improving sentiment toward Airbnb. Wells Fargo Securities and Cantor Fitzgerald also upgraded the stock this week. When we come back, Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth, will take your questions on First Call. Time for First Call and first email. It is from Fred. Are you a buyer of Pan Am Silver? PAS.
Great question. And I guess everyone has been, or those that have been a buyer of silver in general, have done extremely well. Look at that chart. Fantastic. The chart of silver in general, doubling this past year. Everybody talks about gold, but meanwhile, silver has outperformed gold. A lot of usage for silver infrastructure and energy and clean energy and things like that. So it's tough to buy these kinds of names at these high levels. I think, if you own these names, for me, it's been more trimming some of the profits. You continue to hold, but as it keeps moving higher, you trim back some of the profits. I think that's the prudent thing to do when you have investments like this that continue to do well. There you have, silver versus gold, and even gold names, right? I think you trim profits as these names move higher. So I'm not a buyer. I'm not necessarily a seller. I would say it's a hold for me, but continue to trim profits and move money into other areas that are a little bit cheaper.
Okay, we got a little short, a couple of minutes right now, so let's get an email in from Tony. What's Alan's take on BTE and the oil sector for 2026 in general?
Yeah, well, for me in general, as I said, I think the oil sector is going to be in tough. In the short term, you could see spikes. Obviously, Baytex has had a good chart in the last bunch of months. But for me, I think oil in general, the long term, to me, it's going to be in tough. I think oil producers out of Canada, we saw a pullback recently with the Venezuelan situation. Now we're seeing things rebound a little bit because we're hearing rumblings that perhaps our prime minister could make a deal with the Chinese for our oil. Could that happen? We'll have to see in the coming days. Will President Trump like that? I'm not so sure. But
I can answer for him.
There you go. But overall, to me, I think oil is going down over the long term. And for me, I think that means kind of a hands-off. If you're buying oil today, you want to buy something that has a good dividend. There are a number of Canadian oil companies that pay good dividends. I think that's where you look. That is the best recipe for success, so you can actually make some money while you're waiting for the growth. And the hope is that, Canada can sell our oil elsewhere if the United States starts to limit what they take from us.
All right. And that ends the first week of January. Alan, as always, a pleasure, sir. It'll get more interesting from here as well. That's it for us here on The Street. Thank you for joining us. Alan Small, Senior Investment Advisor at Alan Small Financial Group. IA Private Wealth was our guest co-host. And he's up with the open next. The markets will open a little over 30 minutes from now. Have a great weekend.